Hi everyone, this is Vivek Shrivastava. Welcome to my channel. And today we have with us Mr. Raj Sukheja. Now, Raj is the CEO of Red Mammoth Ventures, and he's also a seasoned global deal architect with over 40 years' experience in business strategy, capital raising, mergers and acquisitions, and organizational growth. Raj is also an author, a speaker, and a strategic advisor, and he has helped companies structure transformative deals as well as build sustainable success across multiple industries. So today we are going to speak to him about startup investing, deal architecture, and what it truly takes to create long-term business value. So thank you for joining us, Raj.
Thank you, Vivek. Appreciate it.
So you've been doing this kind of work, this kind of business involvement for many decades now. How did you start? How did your journey begin?
So I've been a serial entrepreneur myself. I worked with several corporates, conglomerates across my career. I was part of the GMR group in Hyderabad. Prior to that, I was in the US, Mauritius, Singapore, even China. And my family, that's before I was born, was in the Middle East.
Wow.
Yeah, so my dad had a business and I've done half my education there. So it's been a diverse cultural experience, and purely in the grown up or being brought up in a business family, I understood that, what an entrepreneur needs to give to a business in order to have it succeed. So post corporate career, I decided that I would like to kind of work with companies that are not adapt or maybe defocused or maybe confused. Wrong words though. These are very long and wrong words, but that's the essence of it.
Right.
Because entrepreneur has so much on his plate.
Yes.
It's not possible to look at every aspect of the business. It's absolutely not possible.
That, and he may not have all the knowledge needed. For example, I am a tech guy, so I'm not that strong in things
Exactly.
like economics and marketing and so on. Yeah.
So you're good at tech, but when it comes to management, HR, hiring policies, interest rates, capital acquisition, structuring deals, capital structuring, all that is a gap. So now the option you have is to hire someone and have him on your team who will support him or her, not being gender biased.
Of course.
Yeah. So on your team and take it from that point. But other side of it is that if you hire somebody and it's a wrong choice, you're stuck with him or her again.
Yes.
And then you keep paying expensive salaries because that kind of talent is not going to be easy, or it'll be a premium cost.
Right. And that's what I've struggled with right from the beginning in my own startup, not even at a high level post or expensive salary, even at low levels, at all levels.
Correct.
Finding the right people.
Correct.
That's what has been the toughest thing for me, most challenging. And that's, where things, if you want to say went wrong, where for me, where just couldn't get the right people, had a lot of problems. They did horrible work. The work was a waste of time, money, energy. So, and I think that's even more pronounced in India rather than other countries, first world countries. That
it's all over the world. Trust me, it's all over the world. Because as I said, an entrepreneur has too much on his plate. Even if he has all the experts available to him, he still doesn't know how to utilize them.
Right.
So utilization is another aspect of it.
Yes.
Because they need direction too, right?
Yes.
And how many places do you direct yourself and focus yourselves on, except for the weaknesses?
Yes.
So sometimes strengths collapse into weaknesses.
Right.
And it's the other way around as well.
Okay.
So then I realized there was a huge gap. Being an entrepreneur, having fueled, funded, run multiple enterprises across my lifetime for others, for corporates, and for myself as a primary founder. I realized there was, and having worked at the top end,
Right.
I realized there was so much left to do in the bottom that I started looking at a consulting career and looking to set up this company, Red Mammoth Ventures, which we have started in India about 8 years ago. Started as a proprietorship company. Today it's a LLP. We are EBITDA positive. We are bootstrapped. No capital borrowed yet.
Nice.
And we are growing rapidly. Probably will go international this year.
Beautiful.
And we've got a global footprint because I have connections. I've worked all over the world. So those people are now partners with us, either utilizing our services or offering us services in their countries. So the access is there, and now we are growing rapidly. Hopefully, we look at a 300% growth every year now for the next 5 years.
Wonderful. um, when you started, did you start at a position at a company, or during your earlier career?
I started, initially my first job was in Dubai after I graduated. I took up a job I'm also an IT technologist. I had a commerce background, and then I got into IT. This was early, mid 80s, I guess. And PCs were just coming in.
Right.
They weren't even there. And I did my first course from multiple small institutes which had flourished across Mumbai. I'm from Mumbai. And at that moment, I realized computers were my
Right.
passion. Okay. And not realizing that, and I always kept asking this question, okay, why, being a commerce, student, why am I being drawn towards computers now? And how is it going to help me? Because I'm neither here, neither there. But then I did my computer science diploma, so not degree, and was fairly adept at it. And then I landed up a job in Dubai as a computer sales guy.
Okay.
Managed a showroom for a while. I was fairly young at the time, probably 66 born. So
Nice.
this was probably 90s, 24, 25 years old. And first job in Dubai, and kind of took off from there. Then in about a year and a half to 2 years, I had my own establishment doing business. It's in the genes, so couldn't get away with that. And we went up to almost 3 stores across Dubai. And then I lost everything during Operation Desert Storm.
Really?
Overnight.
Why would that happen? Because Desert Storm was Iraq, right? And
No, but it impacted Dubai. Every expat had stopped spending money.
okay.
Most Arabs had gone away from this country
Okay.
because there was no one there. So no purchasing power left.
Huh.
No one wants to service computer when there's a war going on.
Okay.
And right at your port, Dubai port, there were aircraft carriers standing there, American soldiers in. The consulate sending us messages that you tape your walls. There's going to be a chemical bomb attack any moment. Fill the tubs with water.
Okay.
Stock up with mineral water bottles.
I didn't know Dubai would have all that.
What tremendous impact! Everything stopped. There was my sale was about, at that point, was about 10 to 20,000 dirhams a day,
Okay.
and it dropped down to not even 100 dirhams a day
Wow.
for about almost a year.
For a year.
Yeah. So I lost almost everything. Everything collapsed.
Wow. That must have been very stressful. How did you handle the stress?
Oh my God! Don't ask me that. I have nightmares even now. So, but anyway, God's grace.
Huh.
Then I got a job in the US, and I went away.
Nice.
Then fairly cook up a corporate career, moved with that. And then I was in Singapore, Mauritius, all across.
Wow.
Then I started consulting at the side. And then consulting became my full-time.
What type of consulting was it?
Financial structuring, deal making,
Right.
capital raising, training. So we set up a company in Hyderabad. I was in partnership with the Rasi Cements MD. I was one of the founders. He was the investor.
Achha.
So we raised capital through him, and we upscaled ourselves to about almost 700 to 800 people. And and we were the primary BPO, KPO service center for Idea Cellular. And even handled some part of Tata AIG business. Yeah, so
Yes.
yeah, and we grew from there. And then I exited in 2007, 2008. Before that, I was with GMR, India IT company. They, in fact, invited me to Hyderabad. I'm not part of that place, so they had invited me there. It was a phenomenal run. But having done all that, the experiences were tremendous. So I can't say that I'm qualified via just education. Education is definitely a major part of it. All my life I've been studying. Even now I study.
Of course.
It doesn't stop.
Yeah.
But the experiences that have shown me the downside and the upside, both sides, I understand what a company requires And I've been creative all my life. So writing has been a passion, like you just mentioned. I published 5 books already. 4 on business, 1 is on self-help. 1 more is coming in maybe this year. So that'll be my 6th book. But
Wow.
all the books are pretty much not from the normal traditional style of writing. They're all non-fiction, no fiction books.
Achha.
They're all non-fiction and all primarily on offering advice to either entrepreneurs, businessmen. And this is more out of wisdom rather than just theories.
Right.
Theories is everywhere. You can get a textbook and just,
Right.
yeah. This is what it is.
Wonderful, wonderful. Over the years, how have you seen the business structuring change, the way of business being done, the people's mentality, or rather the founders and the top people's mentality around business over this period of time?
See, earlier businesses were run on fundamentals,
Right.
the common sense, so to say. I'm not saying that we don't have common sense anymore, but
Yeah.
primarily we've been following certain rules of certain markets that have been leaders in marketing more than just running a business. They've been a marketing institution, marketing masters, I should call them. So if you look at traditionally what was and is today, was a fundamental upbringing or a approach to business which says profit is everything.
Yes.
Revenue has to be, has to consist of profit. Today, revenue does not consist of profit.
Yes.
It is more valuation based.
Yes.
Okay.
Okay.
So a large company, I don't want to name companies, but majority of the companies are nowadays, they talk about burn rate. The burn rate word never existed in our fundamental dictionaries earlier.
Yeah.
So the first time I heard this word, I was like, what the hell is burn rate? So the burn rate is when you deploy cash to get new subscribers on the board, because subscriber is the game now.
Yes.
And you increase the subscriber only temporarily. So you give discounts to consumers, even burning cash. That means you're negative. You're not in profit. And post that, you bring in subscribers, increase valuation, and then you go to the market with a premium ask, and again you raise funds.
Right.
So if the funds keep escalating, your ask keeps escalating, your premium keeps escalating, until finally you go to the main board and sell off your equity, which is being seen as a trend today.
Yes, yes. I'm myself in that loop with my startup because I haven't monetized my app and I'm just going for the initial user base right now. And then I hope you're enjoying the podcast. Before we continue, I want to take a quick moment to tell you about something I'm really excited about: my startup app, Finity. Are you tired of scrolling endlessly and still feeling disconnected? That's why I created Finity. It's not just another social app, it's your connection engine. With Finity, you can instantly discover events, hangouts, and people around you who actually share your vibe. Post about what you love. Be seen by people who get it and turn online into offline. Finity isn't just social. It's real, it's local, it's you. Download Finity today and live your vibe. Given their feedback and their user pattern, I'll decide on the monetization and go with that. But it's very true what you said, because this was decades ago myself. I also came from that mentality or that thought process, and the company that blew my mind actually at that time was Amazon, because for the first time in my life, when I found out, was that they were, at that time, I think it was 4 or 5 years of losses they were in. And I was like, wow, that just blew my mind that they're such a big famous company. I'm buying stuff from them and they're in loss. And of course, later on, they became very successful. And for one period of time, he was the richest man in the world, Jeff Bezos. So I guess that technique can work. Yeah.
As I said, marketing masters. That's what I'm trying to imply here.
Yeah.
That's an approach towards marketing and towards making even a bad deal look good. Yeah. But bottom line is, now look at investors today. They are averse to such investments.
Okay.
Investors have become very cautious now because they know how much can they burn.
Right.
Okay, so the people who used to get money like this are not getting money anymore.
Right.
And it's impacting the new startups because the same investors are not willing to take a chance even with new startups
Yes.
who probably have a potential.
Yes.
So it works the other way as well. Like you just mentioned to me before this talk,
Yes.
that you are having difficulty because Indian investors are looking at being more conservative
Yes.
and they want to see revenue before investing. And without money, how do you generate that revenue? Right?
Exactly.
So technically today, that's a side effect of that burnout that they've already experienced. The people have been given money pre-revenue, on ideation, and no result.
Right. So, what do you? That gives me a perfect entry into this question, which is, what do you look at in a business to determine, whether it's you're attracted to it or not in today's world?
I begin with unit economics. What is the business consist of? Product, service, whatever it may be. How confident and how educated, or how not educated, wrong word again. Let's put it as how confident or able is the founder to deliver his promise. Okay, does he have a track record? Can he prove something to me? I'm not saying a track record in terms of business, another business. It could be a fresher who's come out of college and has great ideas and has done something on his own that shows me that he has the ability to deliver. Focus. Then comes the business aspect. That's about the founder. Then comes the business aspect. The unit economics, scalability, cash flows, revenues, how well planned is the founder, how his business plan makes sense to me. Has he studied the market? Has he looked at what are the options available to him? Because every business, however it begins, definitely needs tweaking.
Yes.
It will not remain the same position
Yeah.
as it was when the idea just began. Because you learn along the way and you have to need to adapt to those curves.
Not even startups, big businesses also.
Every business across the board. Yeah. So this needs to kind of I need to see all these factors together for me to understand whether the investment is worth it and what is the investment, what is the value of that investment, and what's my risk involved.
Okay. What mistakes have you seen founders make over and over again?
One of the greatest mistakes is their valuation.
Okay.
Every founder thinks they've got $1 billion idea.
Well, I don't.
Yeah, no, but I'm talking almost every founder. But having said that, there are great founders as well who come up with brilliant ideas. And see, I'll tell you, nothing is original anymore.
Yes.
If you think that I've got an original idea, no one else has it in the world, you're dreaming.
Yes.
Somebody somewhere is sitting there having a similar or better idea on what you have already thought.
Right.
So we are rewriting code, in other words.
Yes.
And
well, minor adjustments or minor differences.
of course,
But,
improvements,
yes.
optimization, improvement, scalability, whatever could change.
So then in that case, I guess it comes down to delivery and customer management and sort of giving the users what they want better than the other person.
The demand, what is required, what problem are you solving?
Yes. And not even that, but solving it properly. Because if you don't, it's... So because along the way also a lot of things can go wrong. You might have a brilliant idea, but you may not be able to get the code written properly, which is quite common. And then even if you get the code written and you have a solid product, then dealing with the customers, customer service, etc., that's another challenge. And there's a lot to do.
Preparing for the future, looking at cash capital in the near future. What will you require? Because you can't go to capital when you need it.
Right.
You need to go to capital when you don't need it.
Beforehand.
Yeah, because you need to plan. Otherwise, when you reach that stage, then you keep struggling for capital and your growth kind of stumbles.
Right. So tell me about Red Mammoth Ventures. What prompted you to do that? Because, there's obviously other consulting firms and whatnot. So how is that different? What did you see that was missing that you're filling with this?
So as I mentioned to you, over the years when I saw a lot of companies fumble, where they could have actually grown. So I've always been a follower of, this old proverb that says, look towards nature. If you want a problem to be solved, solution, look towards nature. What does nature do? So like you have that, I think the famous proverb that, the bamboo sticks in a storm, they bend,
Yes.
right? Trees don't. So they get uprooted.
Yes.
So adaptation is one part of it. So what we looked at from Red Mammoth standpoint was, how do we just don't look, people call us fundraisers. They say that, oh, guys are specialists in raising capital. We are not. We make it easy for the investor to see your potential so that capital is raised automatically. That's the difference.
I see.
So we bring knowledge to the fray. Consultants most consultants, although that doesn't happen overseas, in India, are taken as, not that they are, but they're taken as postmen. So they take a file, a bank ko de diya, we give it to some investor who has to, do whatever. Yeah, so we don't do that.
Yeah.
No. First of all, we're very picky where our clients are concerned. We're very selective. Okay. So I probably get about, in my office, 3 to 5 cases a day.
Wow.
For fundraise. I do 2 a month, not even that much.
Wow.
Yeah. So, and our cases are fee paid. So it's not that they're doing it free for me and they're offering me, okay, take my case and don't get paid for it. So they're paying me for it, but I still refuse to take that revenue because I don't want those people, because I can't support them. At least I feel I can't support them. Right? Then we take it to the next level of looking at all the aspects that we discussed earlier. And from that moment, we take on a client, and then he's our client for life. That's what we try to maintain.
Right.
So we want 1 crore, 10 crore, 100 crore, 500 crore company come to us and become 10x, 20x, along with us, growing. So we become their external financial wing, if you could call us that.
Wow.
But not just financial wing. We have a team of lawyers, we have a team of consultants, we have CAs, CS, CPAs internationally, and of course our own networks. So we try to give them end-to-end support, advice. We research. We have a research team that goes back and does research on the company and tells them, I don't think this is a good idea, but now it's your call. We don't take a call for the client.
Okay.
So that's the border we stop at. We tell them, look, this is a bad idea, or not a good idea rather. And from here onwards, your call now, whether you want to take it or not, is your business, not mine.
If they consistently don't take your calls, do you kind of get
Consistency doesn't happen because they learn after they make 2 mistakes, they'll learn the price is right there in front of them.
Okay. So what is your criteria for a client being selected by you? What does it have? They have to do? How do they impress you that you decide you'll go?
We usually work with clients that are post-revenue,
Okay.
not pre-revenue. We don't work with pre-revenue clients.
Okay.
Because there are too many, and we don't believe that a client who does not have any skin in the game is serious about his business.
Right.
Okay. But if he does, but there are some now see today in India, so many government schemes are there where you can raise capital. You don't really need to come to us for that. Yeah.
I haven't found that to be the case. You're talking about the government yojanas and whatnot.
CGT, MSc, so many multiple MSME schemes are there, mudras there, small.
I tried. I didn't have much success, but maybe
I can connect you to the people who can get you some support there.
That'd be beautiful.
Yeah.
Because one problem that happened with me, there's the 120 lakh thing, but that requires you to be incorporated for less than 2 years, and I was incorporated for longer, so I automatically get exited out of that.
Right.
There's a long story why there was a two-year delay or whatever, but the point is, so that one, because that was one that I could have mostly gotten, but I can't get that, and then others, I don't know. I mean, I went to an incubator and all, and I talked to them, and they were just like, yeah, there didn't seem to be that many options.
Which bank do you bank with?
ICICI.
Okay.
But I can switch. I mean, that's not...
No, switching is not the issue. Haven't you spoken to the manager with ICICI? They're not willing to help?
I don't believe the bank can do much, right? Because they can give me a loan, but a loan with a very high 11% interest doesn't help.
No, the bank can access these mechanisms
Yojanas.
of the government.
Okay, I didn't know that. But
Because like CGTMS is a no collateral guarantee given by the government of India
okay,
to an entrepreneur.
okay,
Okay, so but the money has to be disbursed through the bank, right?
right.
It can't be done directly by the government.
I thought I had to go through an incubator and not so much the bank.
Talk to a manager.
Okay, well, if let's talk about this
Yeah.
outside. So, okay, so they have they have to be making some revenue, but is one of your requirements that they have to be positive EBITDA?
That would be a question that I probably could be a 50-50 on.
Okay.
Yeah, I would prefer somebody with a positive EBITDA, but even if they end up
Well, who
doing
wouldn't?
this and they're a new company, I understand because it's not easy to start growing revenue day one.
Right.
Like for us, it took us 8 years to be where we are today.
Amazon was in loss for, I think, 11 years, I think, or something like that. Yeah. Yeah. So a very long period of losses. But then they were, large number of users, so that justified it. So in your profile, the word deal structuring, deal architecture comes up. What exactly is deal structuring?
See, it's a broader aspect of, supporting a company to enable it to grow, raise capital, focus. So it encompasses a lot of things. It encompasses capital raising, risk mitigation. So we try telling them that, look, this is a risk. We don't do it this way. Can we tweak it to a sort of format where your risk is reduced? For example, a lot of companies are now moving to other countries, expanding.
Yes.
Now, the legal language that you use in India probably is not the same as you would require to have it, an agreement written down in a different country.
Right. Well, different laws, right?
Yeah, different laws and different interpretations of the same words.
Okay.
It's not just a law.
Okay.
Okay? So, if it's under Islamic regulation, that's the Sharia.
Yeah.
So, it would be the same meaning of the same para, probably could mean something else.
Right.
And I'm not using that as an example. I'm just telling you the cultural difference impacts law. So every country has that, marginal difference, which to an entrepreneur could mean something else different entirely in terms of the result of law. When you really approach that forum, can need support, probably you'll find out what your agreement you've done has zero value and is totally against you rather than for you, but you believed it to be. So this is just a legal implication. Then there is a business implication, the cultural, every culture has a different aspect to understanding, to judging, to communication. So all these aspects and structuring the deal in terms of making you capital ready. Do your books show you that you are capital ready? Are your books structured enough for an investor to be interested? Yeah, looks absolutely fine to me. With minor talk, I can put money in.
So when you say books look good, you're talking about like no bad loans and that sort of thing.
No, I'm not talking about that.
Can you give some example of what is?
So when you talk about just accounting, a lot of people have not filed compliances.
Okay.
A lot of people are careless about a lot of things in accounts.
Right.
Some silly heads have been brought in. Money has been overdrawn. Money has been deviated to other companies. So many aspects. It's not just losses. Okay. If a business is run sensibly, technically, you may make a minor loss here and there till you kind of mature.
Right.
But it's not going to be substantial unless you've done something really silly, which you're not, or maybe it's a circumstantial thing.
Right.
Something has happened.
Or you may not be aware also.
Possibly. But then that's why we as consultants, we call it deal structuring because we look at the entirety of the company and then give you an opinion on that. We just don't look at your accounts. We look at everything. And then we tell you, well, this is your direction, this is what you want to do, based on the vision of the entrepreneur, not our vision. We don't impose any vision on our clients.
Right.
So it's his vision, his business, his product, his service, and his company, and his growth. We simply advise. So we are like the wall, sounding wall that listens and replies back, okay, and then tells them, now it's your call.
Right. What are the different types of capital that a startup can try and reach out for? And what would you suggest? Like, for example, equity, investor gives money and the startup gives equity, loans, which are probably not a great idea, some sort of partnership, possibly, which again seems to be quite rare, or, something.
So we have equity, we have debt,
Okay.
we have a hybrid mix of both.
Okay.
Okay, then we have sometimes we have equity come in without shareholding as well. But then there are so many aspects to that whole the deal that the fundamental is that there are only these few modes of payment. Whether you are a partner, you still hold equity.
Right.
So again, it comes down to equity and debt.
Okay.
So loan and equity are the two foundations, and you can mix match them in whatever way you want.
Right. How much, when you look at a startup, how much do you look at the startup itself? How much do you look at the founder or founders, and decide whether you want to move forward based on how much possibly the founder impressed you, as opposed to the startup and its idea and the business?
There's no weightage as such. It's more gut oriented. Then we have a checklist as well, but that's pure maths.
Right.
Business doesn't work purely on maths. I've seen founders who had so much passion that even business that sounded absurd when I heard it for the first time, it started making sense.
Okay.
And they've been successful at it.
Nice.
Yeah.
What are some red flags you see in a founder? I'm not talking about the startup, just the founder person himself. What some red flags that you...
Aggression, impulsiveness, overestimation,
Right.
overconfidence, not knowing his numbers correctly. So lack of information or lack of having planned the enterprise, the path to growth, whatever. So all those factors, lack of planning, let's put it that way. Yeah.
Right. Have there been any instances where you, or I'm sure there have been, but instances where, you kind of rejected a startup or a founder and then they ended up doing quite well?
Many times.
That happened,
Many
right?
times. Of course it has.
And then so looking back on it, what would you say that you kind of got wrong?
So we learned, though.
Right.
That's what we did.
No, but that's why I'm asking, what did you learn? Like, in the sense, what did you miss and that maybe you should have...
Certain things that probably don't gel with my personality.
Okay.
So I might have reacted from that aspect.
Right.
Yeah, but that doesn't mean the founder was wrong.
Huh.
Every founder is correct
Right.
in their own perspective. Because the industry is dynamic today.
Yeah.
I mean, during our time, we hardly had any opportunities.
For startup wasn't even a word.
Right. And it was a standard profession, doctors, engineers. So you had the plateau
Yes.
things to be done.
Totally that. Like my whole childhood was doctor bano, engineer bano, otherwise you're useless.
Correct.
And even when I was older, like when I was in college, it was all about, getting a job at a company and then rising up the ranks, becoming a vice president or whatever. And starting your own thing wasn't even a thing. And then I didn't come from so much an entrepreneurial family. Towards the end of his career, my father became a consultant. So I did experience a little bit of that, but it wasn't, like your experienced. And so I never at that time even thought about startup or being a founder or whatever, and so it's been a very big mindset shift for me to do that. But one thing I will say, ever since my first job, I decided I wanted to do something on my own.
Lovely.
Yeah. But yeah, sorry, go ahead.
Yeah, that brings me a quote from a favorite author of mine. The author is Richard Bach. I don't know whether you ever read his books. So he says, what the world calls a caterpillar, the master calls a butterfly. So sometimes you can't see the butterfly and the caterpillar unless you have that vision.
Okay. So, but in the cases where, that happened, was there some clue that looking back on it, you're like, this was the clue that this was, this had a better chance of success?
So see, I'm not the only decision maker when we take on a case. There's a team behind it.
Okay.
Okay. So I'm maybe part of it, and I have veto, but I don't exercise veto as much as possible.
Right.
Because for me now, it's almost a time in the next 4 to 5 years when I would exit, and my company is a meritocracy, my firm. It's not a family legacy or a family business that is being run. So I'm trying to build and groom people who will come in and stay with it and become owners in the future and take this vision forward. So having said that, everybody has an opinion. They have a checklist when we talk to founders. So then we kind of collate those checklists and come to a number. Okay, what needs to be done from here onwards?
Okay.
And then at the point of discussion, then there is some soft skills that we look at, some hard skills, business, vision, industry, migration, future, all those things are kind of brought together. And then we make an assessment whether we want to take the client and how we can help him. Most important is what we look at the client, whether can we help him. That is the first thing.
Right.
Because he has a certain need. It could be consulting, it could be information, it could be research, it could be financial capital raising, it could be anything. So can we help him is the first fundamental question. Because if we can't, then there's no point in doing all that exercise.
Right. But I would imagine you'd be able to help pretty much anyone in some way. If not financially, then consulting wise, if not consulting strategy, I mean, right? Or, but
some founders come to us who don't think that they need help. They come to us for the sake of coming to us.
okay.
Okay. And they will not listen to you.
Right.
So that's the first thing we look.
Okay.
Is he listening to us?
Okay.
So in interim of a conversation, we throw off an idea, knowing that we are not going to implement it, just to understand whether he's listening to it or he's not. And in most of the cases, these guys don't even respond to that idea.
Okay.
So he's not even heard what you just said.
Right.
So when he's not hearing you at the outset, when he's coming to you for business or for money or for whatever, at that, what is he going to listen to you later?
Right.
Yeah. So things like that. So it's an evolution. We also keep learning, but that's also not 100% true. Some people, come to us when they're in trouble, so their mind is somewhere else. Well, you can't kind of put a tag on it and say, hey, no. But you look at all the sides and then take a decisive call based on whatever. And we do face-to-face meeting. We don't prefer to do Zoom.
Right.
Yeah. So it gives us a feel of the person,
Better gut feeling.
Yeah.
Let's talk about exit strategy for startups. Now, obviously, that can happen at any stage, potentially even at the idea stage, although that's pretty rare. So, what do you see typically for exit, and what kind of characteristics or qualities does the startup have to have when that kind of a exit happens?
Now, a startup cannot have an exit technically.
Okay.
Exit is usually a mature company exiting at a certain stage
Okay.
where majority of the shares are diluted.
Okay.
Okay. In my mind, exit is when majority of your shareholding is diluted. Now, I hold X amount of shares in Red Mammoth. When I exit, almost 70 to 80% of my shares will be diluted.
Right.
Technically.
Right.
But before exiting, I need to have that premium valuation for me to exit the shares. Because I put 8 years of my life
Right.
and a 40-year experience behind the company.
Oh. Right. No, what I meant was what kind of a stage, I guess, or situation, financial, market, user base kind of a situation does this, not, if you don't want to call it startup now, the company,
A business.
has to have before it maybe gets acquired by another bigger business.
Right. So you're talking about raising dilution of shares, exit, right?
Yeah.
That's what you're specifically mentioning.
Yeah. Well, like for example, me, right? Me and my co-director own the shares of this. It's a private limited. So let's say XYZ company buys it out. So all my shares go to them. I get money, cash, and that's the end of it, right? So what I mean is, but where do I have to be for the bigger company to potentially be interested?
Right.
That's my question.
We call that critical mass. At least I call it critical mass.
Okay.
When you reach a certain stage, okay, either you feel that I've reached enough premium to be able to get some decent amount of wealth from the company. Okay, that means it has to be at a certain stage, and there are numbers to translate that to. I'm just giving you a broad answer. So once you have those numbers clearly in your mind, suppose in my opinion, I'm looking like 100 crore valuation, hypothetically.
Right.
Okay, and I know I have 50% shares in the company. So I would like to exit 40%, so I get 40 crores
Right.
into the company, and then whatever I need to take, I'll take back. If that valuation is my goal, that's my exit point.
No, but what my question is, why the other company, the bigger company buying out, how to make yourself attractive to them? In the sense, why would they make the deal? Is kind of, that was the question.
The reason companies buy into other companies is either as investment, diversification, or extension of their business, core business. Right. So when you talk about extension of core business, it's something that they are doing, and you are in a similar business.
It adds to
their kitty.
Right.
Or they are looking at diversifying. I'm in an A business. I'm looking at the dynamics moving to AI.
Right.
So I put money in AI. So I'm looking at future diversification, so that if tomorrow my business becomes redundant, or maybe does not become redundant, it's running, but I have a growth business along with me, running side by side.
Parallel.
Yeah. So these are the reasons why somebody would kind of put money in you, or purely as an investment. Okay, I believe in you as a founder. And I know that Vivek is running this particular program and he's going to definitely be successful. So whether I can add some value besides money and value both, or just money.
Typically, though, I think mostly when a bigger company buys it out, they generally kind of make a clean sweep of everything. They may keep the founder as a director or something, or and a consultant advisory.
Not really.
No,
not necessarily. It completely depends on the investor's ideology and his goal and focus in terms of what he wants with that company.
So it's a case-to-case basis.
It's absolutely case-to-case.
Okay. You've said at some point, I'm not 100% sure where, but lions roar, not whine.
Yes.
Is your quotation. What do you mean by that? Can you expand on that?
So no excuses.
Okay.
You talk straight, you talk to the point, and you deliver results, like you said. Results are important.
Yeah.
So I can make a million excuses to you. So I don't expect that from my founders. I don't expect to give them any, talk in terms of just selling them or, making excuses for whatever reasons they've come to us.
What do most founders get wrong about strategy? What strategic mistakes do they make, would you say?
Strategy depends completely on the business. So every business has a different defined strategy, B2C, B2B, or whatever. So, and the scale, and the founder, and the product, and the service. So it's a very customized kind of an approach. So it's very difficult to say what they get wrong. If they are not successful and not growing, they should relook at strategy.
Right. Okay. So, I'm a little bit curious now about your books and your being an author and promoting those books, because that's kind of, we can say, a business in and of itself. Do you have, I myself at some point planning to write, a book, probably focusing on my life journey of, corporate as well as startup entrepreneurship. So what advice would you give to someone thinking about writing a book and then publishing it and, making the book a success?
Well, I believe that writing a book and getting it published is itself a successful endeavor.
Great.
I am not really bothered about whether the book sells, does not sell, becomes a bestseller, does not become a bestseller. That's not the objective. The objective is that I love writing. So whenever, it's a passion for me.
Nice.
Yeah, it's a stress buster. It's a passion. It's something that I would like to give of my life to somebody who cares enough to listen. That's the only message I have. So I'm not concerned whether my books are very hot in demand, how they sell. So I don't put much effort in it. My effort is only in the writing.
But how do you publish it? Like after you've written it, now what do you?
There are publishers available.
Okay.
I mean, it's not that I've got a penguin on my list. These are small publishers who do the proofreading, editing, and publish it for us.
Right.
And they help us with marketing. So that's what it is. It's a pay service.
So yeah, I know. I have a couple of connections like that.
Yeah.
But I was
There's plenty of such publishers around.
Oh, what do you think about self-publishing yourself on Amazon, for example? They'll let you do that, right?
They let you do that.
Yeah.
And now the tools are also there. AI does everything.
Yeah. In fact, you can write the whole book in like half an hour using AI. I don't know how fun it'll be to read, but yeah.
But the question is, when you see, you can use AI as a tool in terms of probably even writing a book. But the idea, the depth, the oomph factor has to come from you.
Yes.
AI cannot bring that out.
Yes. Well, for now.
Yeah, for now.
It's quite interesting.
No, because your thought, right?
Yeah.
That thought it cannot replace. It can't replace you as a person.
Yes.
But
that's where you put the prompts in. That's you. Where you're entering the prompts is the you part.
Right.
But yeah, no, I agree. Yes, we aren't there yet, but it's a little bit surprising, even shocking how quickly it's.
There's no doubt. AI is awesome, phenomenal.
Yeah, but it's a bit scary how what the future is
really scary.
What's going to happen?
Yeah.
I'm not even talking about the Terminator style, end of the world thing, but more just if AI is doing everything, what will we do? How are we going to earn anything?
Probably the format of earning will change. I don't think. I don't know where we are heading. It's
Elon Musk has already told medical students in America to not go to medical school because he's saying by the time they graduate,
correct,
robots and AI will be doing everything medical.
Yesterday, I saw a post on LinkedIn. It says 500 tasks of accountants being done by AI accountant.
Yes.
So, I mean, accountants are already redundant.
Code also, I was speaking to an investor type yesterday at night. It was his morning in America. He was an American guy. And he is a successful entrepreneur and he's got his own company now, which is very AI focused. And he was saying, I showed him my app and he was saying he can make it in 30 days using his AI tools. And I told him, wait, we use Claude Code. And Claude Code was only a little bit helpful for us. This utopia that it'll write all your code for you doesn't exist. So I don't know. I think he underestimated the complexity of my app a little bit, but because I don't think I can do this in 30 days. Maybe he has some special tool or something, custom tool.
The app itself, building it today is not that much of a challenge.
Right.
With whatever support systems that are available. The problem is to make it, there's so much noise.
Right.
How do you penetrate that noise and reach to the client?
No, but my point actually is, and this is, I'm coming from actually doing this. So I know a little something about it. We use Claude Cowork and it was only maybe 10% helpful. So 90% was still manual. Again, it still had to be done and all the QA, I did the entire QA of testing and all of that, of this. And it was a lot of work. A lot of complexity, and I don't think we are there yet that you can, I can just build a complex app for you and you're ready to go.
I'm sure.
Yeah, I think we are still at least 2-3 years away from that.
There's so many narratives in social media nowadays. It's very hard to understand who says what and how much is real about it.
Yes, because I completely disagreed with him, but I obviously didn't want to insult him or anything. But
no, but no point in arguing with somebody who's got a set mind anyway.
Right. Well, anyway, he was kind of pitching this thing. He wanted me to pay X amount of money and join his sort of incubatorship. And then I'm like, okay, I think I know, I think he's kind of blowing the picture up a little bit or whatever. But anyway, yeah. What do what advice would you give to a founder or someone who is thinking of starting something or is in the middle of starting something right now?
Plan well. Plan well.
But planning means there's a lot of areas in planning. You can plan for the idea, the marketing, the accounts, the this, the that. So
the foundational planning has to be done, right?
What do you mean foundational?
Basically, they've set the fundamentals right. What is your product? What service? Which market are you catering to? Who's the niche? Because you can't cater to a larger market having limited funds or whatever. As an individual or as a businessman, even us, Red Mammoth is not so big that I can tap the whole world. I can't.
Right.
There's a niche that I work with. So I decided instead of going for quantity, I'll go for quality.
Right.
So my focus is very clear. I have a identified target client, and I focus on those kind of clients. And we don't do any ads,
Right.
zero ads. It's all referral business. Absolutely. People who have worked with us, people who know us, 1 year, 5 years, 10 years, 20 years, send people our way and say, hey, talk to this guy.
Right.
You know?
I'd like to just describe my initial days planning. So I tried my best, right? I had a prototype built. It was basically just one screen to another. It didn't even really have any much logic behind it, but it gave the idea. I showed it to various people. I even showed it to people in the US on a trip there. I hired a consulting company, kind of, you could say, a smaller version of yours, and had them analyze it. They did all sorts of stuff. They did focus groups. They even made a very nice, complex Excel spreadsheet of financial numbers and all. And then they gave me the green light. So then at that point, I decided, okay, fine, I can move forward with this business, with this startup. And then, of course, I ran into a lot of dev issues and people issues and whatnot. And I got delayed and went over budget. That's another story. But I did do my homework. And yet there's still struggles and there's still challenges. So just hearing this story, what comes to your mind?
Do a session with us.
Okay. But I have to meet your high standards, right? Before I even get into the door, or no? Will you let me in?
You are ill.
Okay. Yeah. So thanks. We're getting close to running out of time here. Did you have any last words of advice for our viewers?
Well, this is to all the entrepreneurs out there. I wish you all the luck. I would ask you to stick to fundamentals before you work on your business or you start a business. And when you've started it, if you have already initiated your business, look at your fundamentals, look at your numbers, look at your market, prepare a budget for now, for maybe a year on. You should have enough funds for you to carry you for 1 year at least, running your business the way you want to run it, and look at your numbers on a monthly, quarterly basis. Keep an eye clear on your hiring. Do not squander money. Hire consultants. They'll save you a lot of money if you choose the right ones. And they will also, in today's business, there are one-man billion-dollar companies. This opportunity never existed before. Never. I mean, during my college times, I used to be told, if you want to make $1 million revenue, you need at least 10 people in your business. Otherwise, you'll never be able to do it. So about $100,000 per head. Today, one kid, 15, 16 years, is having $1 billion worth of a company. So look at everything, be smart. And you guys are smart, I know that. So focus on that and grow from there. God bless.
Wonderful. Thank you. Thank you, Raj, for joining us.
Vivek.
It was a wonderful talk. I'm sure the viewers got a lot of valuable insights and information from this. Please comment below and let's have a lively discussion around this podcast. And Raj's information and Red Mammoth Ventures information is going to be in the description below. So please check it out. And thank you very much, Raj. Hopefully we'll see you again.
I look forward to it.